What are they feeding the US labour market that's keeping it so buff? That's what everyone who saw Friday's payrolls data is asking. January's employment report showed gains beyond expectations. According to the data, the US economy added 353,000 jobs in January. The figure is more reflective of the start of an economic boom as opposed to an incoming recession. Some plausible arguments for this continued robust economic performance include the continued fiscal spend, the degree of excess savings in the economy, the slowing inflation, and America just still being an all-round great investment destination, with the higher rates making it even more so. Even so, it still feels too good to be true. But who knows, maybe they found a way to make Bidenomics work. We will, however, be diving deeper into the data for our chart of the week. The accompanying video will be out on Wednesday. The strong data will add to the Fed sentiments that it is in no rush to reduce lending rates, and in fact, we can now see rates remain higher for longer. Looking at the Fed fund futures, the market no longer expects a rate cut in March, but there's an 80% chance of the first one now happening in May, and this obviously has a knock-on effect, and we could see other central banks also hold off on cutting rates. These rate expectations, along with the stunning data, as some put it, saw the dollar rally against the rand. Now, the rand is unlikely to attract any significant backing given the political risk baked into the upcoming State of the Nation address, as well as the budget happening later this month. Then we need to talk about what's happening in China. The Chinese economy is underperforming. It's facing its worst property crisis in 9 years, and last week the stock market fell to 5-year lows. There are several economic indicators that reveal the world's second largest economy is not in great shape. Last week, a Hong Kong court ordered the official liquidation of Evergrande Property Developers. The developer has $300 billion in debt it can't repay, and this court order dealt a further blow to investor confidence. Now, the Chinese state has rolled out several stimulus levers to try and pull the economy out of its rut, including cutting banks' reserve requirements, and there are reports that a stock stabilization fund is also being considered. But again, the criticism remains the Chinese government has not gone far enough to see the economy get back on track. Staying with international affairs, global trade remains under pressure as Houthis continue to target vessels in the Red Sea. Now, these attacks could potentially be devastating to African economies, especially that of Egypt. For our discussion on this topic, you can catch our podcast Markets Magnified on YouTube as well as Spotify. It's a fairly quiet data week ahead. However, Monday's release of the US's services PMI will provide further clues to the ongoing resilience of the US economy. And then locally, manufacturing production for December will be released on Wednesday with a slight uptick in the data expected. That's it then for the week that was and the one to come for the markets.